Good morning and welcome this morning to Trading Futures, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach, senior manager here at Charles Schwab. I'm joined out there in the chat by my good friend Connie Hill. She is a 20-plus year veteran in the financial markets. She is there to help answer your questions and keep the conversation going. Welcome to all of you. Thank you for joining us this morning for this Futures webcast. Whether you are here live or in the recorded version of the webcast, we're glad to have you here either way. Be a part of the conversation by chatting in your questions or leaving comments in the comment section. Welcome to all of those of you who are new, and certainly those of you that have been here before. We're gonna jump in here really quickly, but a couple of, and obviously, given the way that the market has been moving the last few days, and the fact that we've got an FOMC meeting this week, and we've got news in the oil market and geopolitical risk, there's a lot of stuff going on. But before we get to that, a couple of quick housekeeping items. Remember that everything we talk about simply for illustrative and educational purposes only. It is not any kind of a recommendation or suggestion or solicitation or anything else. Remember that futures and futures options trading involves significant and substantial risk. Not suitable for all investors. It does require a separate trading authorization. Please read the risk disclosure statement for futures and futures options prior to trading any futures products. Also remember that futures trading requires a futures margin, sometimes known as a performance bond, an initial entry margin into a position, and then a maintenance margin to carry that position. We'll talk a little bit about that as we go through the discussion here. Remember that investing, whether we're talking about futures, equities, options, doesn't matter, involves risk, including loss of principal, and for the products, certain products and strategies, including futures products, loss of more than your initial investment in the trade. When we talk about stop orders when it comes to futures, those behave a little bit differently than they do in the equity market. Stop order is not guaranteed in execution. Any stop order, whether it's a buy stop or a sell stop, that generates a market order. Due to exchange rules based on certain conditions, the exchange may just completely reject the order, or they may substitute the market order for an exchange-designated limit order within a certain protection range. So something to pay attention to as you begin to, or maybe continue to trade futures products. Now, a couple of other things to keep in mind, and we may talk about these along the way: virtual currency derivatives, including those surrounding Bitcoin and Ethereum and other virtual currencies. Those involve unique and significant risks. Make sure that if you're going to trade those, you read the NFA Investor Advisory and the CFTC Customer Advisory about those products. Remember that virtual currency products are digital representations of value. They don't yet have legal tender status. Also, as we jump into this discussion today, remember that we're going to be using the thinkorswim desktop software platform. It is specifically the paperMoney version. It is not a guarantee of future success out there in the real world. It does not do certain things that a live trading account will do, especially when it comes to things like fill prices and assignment of short options, those types of things. There are some differences. So be aware of that when you move your practice from paper trading to live trading. There are going to be some differences. Remember, though, of course, that past performance, no guarantee of future results. Let's pop out here to the market and let's see what's going on here really quickly. And again, once again, welcome to all of you that are with us. Now, a couple of quick questions. So Mr. Lashino says, can't find the options on future session. We don't have specifically an options on future session. We do, however, have in trading index options webcast. That is on Wednesday afternoons, 3 p.m. Eastern time. And we do that every Wednesday afternoon. On occasion, we will talk about, not rare occasion, we will talk about trading futures or options on futures in this particular webcast. And we may do that upcoming. But at the moment, we're primarily focusing on what's going on in the futures market and those futures contracts themselves. But good question to ask. So as we jump into this discussion here, Sam says crude oil up. Shocking. Let's take a look at the S&P 500 here, futures, the /ES, and seeing a little bit of a downward move here this morning. Cash market's up and running, futures session down, but up off of its lows. If we look at this candle, I'm going to zoom in here a little more closely. A little bit of a spinning top. Not at all unusual, I don't think, ahead of an FOMC meeting, especially one that is, I'm not going to say contentious because it really isn't. It just represents perhaps potentially a line of demarcation between the Powell Fed and perhaps the Warsh Fed. And so for that reason, there is a bit of not ambiguity, but perhaps ambivalence to what's going on. Kind of seeing some mixed signals here. Starting to see the RSI for the ES futures kind of tailing off just a little bit. A bit of a bearish divergence. Not huge, but a bit of a softening in terms of the upward momentum strength that we've been seeing over the course of the last few weeks. And I think this is kind of the thing. You know, you look at what this futures contract has been doing day after day after day after day, really coming from the end of March into this kind of as we get closer to the end of April here. I mean, you look at the successive upward days that we had, and now we're kind of seeing those kind of piano keys where we're getting up and down, up and down, up and down movement here. Softening a little bit, seeing the RSI tail off, but it doesn't mean necessarily we're seeing a reversal. We're well above the 50, well above the 200. Those two moving averages are parallel to one another in this particular case, kind of tracking broadly the overall, still some bullishness in the market here, although we may see a little bit of a pullback into perhaps a bit of a support level. We'll see if that plays itself out in some of the specific charts of the futures contracts. Same thing with the NASDAQ. Again, very, very strong bullishness. Starting to see that RSI tail off just a little bit. Not as dramatic a bearish divergence, perhaps even as the S&P 500, but a little bit bigger down day today. And a little bit bigger, down day than we've really seen the rest of this month. I mean, this has been unusual and not necessarily unprecedented, but it has been unusual and somewhat defiant of kind of the probabilities of really technical analysis, of candlestick analysis. A lot of times we'll look at that probability of a run of candles that are bullish. In this particular case, all of these green candles. And if we take a look at what's gone on in the NASDAQ, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 green up day candles, that's about double what you would typically see from a probability standpoint in terms of a run of bullish candles. So a fair amount of bullishness here, but tailing off just a little bit, like we said. All right, taking a look at the Russell 2000. This has been kind of going sideways for the last little bit, maybe a little bit more of that sideways ambivalence in the small caps, kind of the wait and see. And again, this is maybe interest rate driven. So maybe this is as we go into this Fed meeting, kind of that wait and see. Although there's not an expectation really from the news media and from analysts in terms of any kind of a change coming out of this meeting. That's why I said it's not really a contentious meeting. But maybe waiting for some clarity, at least in this case, minor bearish divergence here against that Russell 2000 going sideways. So not a lot of movement in the Russell 2000. So while I'm still here on this particular chart, on the futures grid chart, I want to pop over here to a couple of others, /VX. And I traded this earlier this morning as an example. We'll look at it in just a minute. Kind of going sideways. The VIX up just a little bit this morning, maybe 2%. Not a lot of momentum behind it. That RSI sitting down in that middling range, down around the 44 level or so, slightly moving higher. And we'll look at what that means on a much shorter term time frame in just a minute. But we're not seeing an explosion of VIX. It's down near its 50 period moving average, down near its 200 period moving average. Below its 50 period moving average, in fact. So VIX, kind of that volatility expression falling off a little bit here. Let's take a look at /CL, which is the crude oil contract, and this is the one that everybody is kind of focusing on, at least recently, for obvious reasons. But seeing the VIX, crude oil up once again, down in the very short term, kind of coming off of those highs. But, we've kind of looked at this 6 ways from Sunday, and the question is, I mean, there's this is always news driven, right? We just had the news that came across the wire that the UAE, United Arab Emirates, is leaving OPEC and OPEC Plus as an OPEC and OPEC Plus member. What does that do to the oil producing conglomerate group? I don't know. What does that do in terms of changing crude oil prices? I don't know. It's going to depend on the movement in the straits. Obviously, it's going to depend on demand destruction, which, by the way, we're seeing in some of the distilled products and the refined products coming out of the crude oil complex. But there's a great line in the 1963 ensemble movie, It's a Mad, 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 Mad World. Buddy Hackett's talking to the group that's standing around, and he says, we've figured it 16 different ways, and no matter how we figure it, somebody doesn't like the way we figure it. And so when we start to see this kind of movement, I mean, you see upward movement, we see downward movement, we see bearishness. You see an RSI that's tailing off and maybe coming back a little bit, and now you start to see this upward movement with a growing strength in that RSI, that momentum indicator. But coming off of these highs, we're centering right around this $100 mark. And I think that's kind of where we're getting to in terms of understanding where there is perhaps a bit of resistance. This excursion and then removal back below that 100 level would suggest that, maybe this 100 level is the near-term resistance that we're seeing this, right? So we'll take a closer look at this as well. Crude oil futures kind of sitting where they are. I want to look at two other futures contracts here, ZN/ZN, which is the 10-year Treasury note. And going into this FOMC meeting, now obviously we haven't seen a lot of movement in the 10-year note. And this is the 10-year, not the yield. This is the note price itself. So yield moves opposite to this. So yield would be moving up as the note moves down. If we were to do this /10Y, now we're seeing yields, right? So these are in opposition to one another. If I were to do this, let's come over here to our comparison line. I'm just going to throw a comparison line on here, / or actually go to COMP, comparison. And we're going to pop comparison in here. I'm going to go to the gear icon, /ZN. That's the note futures compared against the 10-year, which is the yield. And you can see that oppositional range. And these are moving in opposition to one another by necessity. When yield goes up, bond price goes down. When bond price goes up, yield goes down. So we're seeing in this particular case, bond price going down, yield going up. Rates going up is the other way to look at that, right? So interest rates climbing, that may be what's keeping the Russell 2000 kind of static and moving sideways, is the fact that over the course of the last couple of weeks, last week at least, we've seen short-term rates, that 10-year rate, or mid-term rates, if you will, continuing to rise as bond prices have come down. Will that change at this meeting? Good question. So that's where we are from kind of the interest rate standpoint, from the standpoint of crude oil, the standpoint of the equities markets, and the standpoint of volatility. I'm going to just hide this really quick. I want to look at one more, and that is /GC. And then I wanted to address a question. And James says, or I'm sorry, JDML says, if oil is so news-driven, does it pay to use technical analysis? And the answer is yeah, I think so. I mean, yes, everything is news-driven, right? Whether it's an equity, whether it's a futures contract, everything is news-driven. Does it still pay to use technical analysis? Yes, because markets being what they are and traders being who they are tend to follow those levels. It doesn't mean that we're defying technical analysis because of news, although news can change everything. We still can make a decision point around technical analysis. I mean, that's if you're not using technicals to predict the future, you can use technical analysis around the idea of making a decision. If this, then that type of scenario. So gold coming off a little bit, and that's kind of showing some weakness here in the near term /DX. The dollar future climbing a little bit, which is also why perhaps gold is moving down just a little bit in this particular case. So I wanted to come back over here to the monitor tab. Now that we've got that in mind, I wanted to come back here to the monitor tab and look at a couple of things. One, I had a VIX trade on earlier that got stopped out. So we'll talk about that in just a second. Stop may have been a little bit too tight. We'll talk about how we created the trade. But the one thing I wanted to manage really quickly here, first of all, is this calendar that we've got, calendar spread, that we've got on /MCL, which is the micro crude oil contract. And the spread was short the current delivery and long the December delivery. So short the May, long the December. The expectation being that if we're short the May, that crude was going to go down in price, and long the December, that contract was going to get more expensive. And that contract is getting more expensive. The longer dated one is rising generally. When we entered the trade, that was at 74. It is currently sitting at 78, so it's gained 4 points. So that's worked in our favor. What has not, in this particular case, was the expectation that crude was going to come down significantly. It did for a little while. In fact, we were up. The last time we looked at this 2 weeks ago, we were up, or the last time I worked at this 2 weeks ago, is seeing that crude contract going back up again, now starting to back off a little bit. It's gone down a little bit this morning, because when I looked at this, first of all, crude oil was sitting right around $100. It's now sitting at 99.15. So that's kind of working against us. The question is now, we're at 20 days to go until expiration on this, or until delivery expiration. We're not going to, it doesn't allow for physical delivery, so we would have to roll this. And we've already rolled this once. Do we need to close this one out and just leave this long backdated futures contract in there to potentially rise? So given that, we're starting to see this back off. It's doing what we expect it to do at the moment, coming back off just a little bit, but not significantly. So the premise is we're not necessarily, in this case, trading one directionally or the other. We're trading the difference between these two. So because we're short the front and long the back, we want this difference between these two to get closer together. At the moment, it's doing that. So I'm going to leave this in place, because that crude front month contract, the May deliverable, this /MCL M26, this May deliverable, is coming down just a little bit. Slightly. Well, now it's going back up. All right. We're going to leave it in place because the long-dated crude's still getting a little bit more expensive. And that intent was that as the longer this goes on, the longer the geopolitical risk goes on, the higher that longer-dated contract is going to go. It's going to increase a little bit. That backwardation that we've seen is going to start to come back together a little bit. So there's that one. The next one that I wanted to look at really quickly here is this 1 ounce gold futures contract that we're in, and we are long this contract, and this is going against us in this particular case. So we're going to look at, first of all, potentially stopping or potentially taking this one off, or at least moving our stop on this 1 ounce gold contract. And then here's that VIX contract. So I'm going to pop over here to our charts really quick. I'm going to make this, change the chart to our futures grid with labels. And we're going to put this in place here, /VX. This is the one that we got stopped out of, /VX. So let me show you the trade. And this is the this is the challenge with trading the short-term patterns on a volatile product. Now, a volatile product, this is volatility. So volatile product is in its essence, right? It is volatility. So my thought was, in this trade this morning, I was watching this because I was up about 5 o'clock getting ready for the network appearance that I had, and seeing this very strong impulse move in volatility as it started to move higher. Then it pulled back into the support level and kind of bounced a little bit. So I set up this entry on a typical close above the high of the low candle. So our entry into this trade came right here. The low candle was, if we'll zoom in a little bit more, let me put this over on the right-hand side so that we can see it. So the low candle was this one right here, this kind of long-legged doji candle, if you will. That was our low candle. That touched down here at around 20.35. And looking for a close above that high. So this was our entry candle right here. Let me grab my annotation tool so that we can see that. Here was my entry candle right there. That one right there that I'm looking, that I put the little cursor on. And I set the stop based on that low candle low. And that's where my mistake was in probably being a little bit too tight. That was our stop, and we just got stopped out 10 minutes ago as we started talking. These are 5-minute candles. So we got stopped out of the trade. The intent of the trade, though, was to see this move. Let me take that arrow off. To see this move up to here. That's the target. So all I did is I duplicated that impulse move on the bull flag, looked for the bounce. We got into the trade, and it didn't make the move. Now, okay, yes, this stop perhaps was just a little bit too tight because we stopped out on that little bit of a pullback. There wasn't a real strong trend. The ADX not above really that 45 range or so, but still above 25. So it still has some trend strength to it, even though it's kind of going sideways here in this particular case. But the idea being that if we get into that bull flag, we see that impulse move to the upside, and news, the news activity going on, likely to bring that volatility back. It didn't do that, at least in the near term. It kind of fell off a little bit, and volatility being what volatility is, volatility can be volatile, and so we got stopped out. That is entirely the purpose of having that stop order there, so that it takes us out of the trade fairly quickly, as opposed to staying in for a longer loss, right? A bigger loss. So now we're still kind of going sideways here, realistically. Let me clear those annotations. And let's kind of take this through the mindset again, right? If volatility is increasing, we've got these three kind of bottoming candles here, 1, 2, 3, with lower shadows, a little bit of price discovery back down to this stop. What we might do in this particular case then is look for a breakout of this, what is perhaps a resistance range. Now, I will tell you this. Rachel Deshelle teaches trading price patterns. I think it is, in fact, Wednesdays? Maybe it's today. And in this particular case, if we do see a little bit of volatility, we may see that move quickly. So I'm going to go ahead. I'm going to see it just did that. So I'm going to set up another trade here. Same target. I'm just attenuating that target a little bit. I'm going to keep my stop just down here again at that level and kick us out if it goes back down to the downside. But I'm going to do a buy stop order here at the 2055 level. So we're going to right click. We're going to create a buy custom with OCO bracket at that 2055 level. So 2055 is our buy stop. That says stop, wait, don't do anything until this price gets to 2055 or above, then enter the trade, else wait. Our target is still going to be 21.05 here. I'm going to make that 21.0. Actually, let's just make that 21 even in this particular case. 21 even is our target, and we'll make that good till canceled. And then our stop we'll make right down here once again at the 2035 level, so that it kicks us out. I'm going to go 2030 a little bit. just give it a little bit more room to the downside. I don't like doing that necessarily, but I know that I don't want to get kicked out on that same level. I want to give it a little bit more flexibility before it kicks me out of that trade if it moves to the downside. Because I get kicked out once at 2035. I don't want to get kicked out twice at 2035. So now that we've got our order in place, and this is the idea, wait for that order to break, and we might do it. We got to go ahead and get this in, read the order, make sure that that's what we want to do. Here's our initial margin, 9,700. We're going to put this in our futures group, and we're going to click on send and fire that order off. And it just triggered. We just saw that pop up above that level. And we are in this trade long, looking for a move up here to the 21 level. So short-term bull flag pattern. The pattern is there. We're looking for that break above that resistance level and a continuation above that resistance level. We've got our stop in place. I'm going to take this. We'll activate it. We'll move this down just a little bit. Target is still the target up here. And our entry, we're going to move our entry. Let's activate that and let's drag it up here. That was our entry right there. All right. Okay. All right. So imagine Sisyphus being happy. Okay, I like that. Any good book or blog that explains the oil market for the beginners. All right, let's do this. I'm going to pop over here really quick. And we're going to go to schwab.com/futures. And the reason I'm bringing you here is because there is information here about the crude oil market. You're also going to see some of the things that go on in the crude oil market, talking about market price, talking about the products. You're also going to find information about so market commentary regarding this. This is one of those areas where, as you get to this, you go to Learn, the Learn tab here, and this is where you're going to get market insights and news. You've got the Schwab Network, brought to us by our media affiliate, Charles Schwab Media Productions. But you've got a lot of information about what's going on here in the market. So futures market updates, options market updates. You've got information about different types of products. But this is going to be a great location to kind of get more information about those oil markets and how they work. But it starts with schwab.com/futures. And then you can drop into some of those specifics regarding that. So that's a great way to kind of get into that Imagine Sisyphus. Hopefully that is helpful. By the way, while you're here, if you want to look a little bit more about what we've done in terms of trading oil futures, for instance, you can come here to the Trader Talks webcast page, youtube.com/Trader Talks webcast. Type in the word oil. And you're going to find a lot of commentary and discussion about oil. So this is a great place to kind of find what we've done previously in terms of some of these webcasts. All we ask is that when you come to this location, click on subscribe. Give us a quick subscribe right there. Makes it easier for you to find these webcasts anyway. Also allows you to set alerts for upcoming live broadcasts of these webcasts. And any new archives that we drop in there, you can get an alert about those. So a great place to kind of set things up. Just click on subscribe. Gives you that ability to set up some of those alerts. So let's pop back over here to our webcast page. We're still in the trade at least. So still moving in the direction that we want it to move. Let's take a look at /10Z, which is the 10 ounce, /1OZ, not 0Z. This is the 10 ounce futures contract. Let me put these side by side again, my grid. And we are long this contract at the moment. Yeah, James, you're absolutely right. A lot of we don't know. So we're long this contract at this particular point. The question is, as a matter of fact, let's do this. I'm going to pop over here and I'm going to show the orders that we are. Apply, and there we go. So here's our stop. We're looking for that target back up here. We put this trade on a while ago, looking for that kind of bull flag move, and it's not done that. So my question is this, we've left our initial entry into this trade was on that breakout right there, above this resistance level. It's now broken below that, what was previous resistance, and maybe now acting as new support. We gave it a little bit of room where we put our stop down here at around the 42.96 level or so. The question is, do we maybe at this point, now that we're in the trade and it's starting to tail off just a little bit, we're starting to see the trend weakening a bit. We've got a 21 handle on the ADX. We've got a declining RSI. Do we want to move our stop up to maybe somewhere below this diagonal trend line that might take us out of the trade? Now, one thing I might put on here would be, for instance, let's see if we can put on here SIMP. I'm going to put on a 50-period simple moving average in this case. We're below the 50. Let's change that maybe also to a 200-period moving average. This was a little bit longer swing trade. There's the 200-period moving average. We're well above the 200. That's above our or below our stop there. Not giving us much help, so I'm going to hide that real quick. So I'm going to look at maybe moving this stop up just a bit. And I'm going to move it up to just below this diagonal trend line. So you give it that break of that diagonal trend, which I think is probably a better indication of the longer term trend here. So I'm going to grab this stop by clicking on it. I'm going to drag it up, and I'm going to set it right here at about 45.20 or so. And I can edit this order. We'll make that 45.17. Let's make that 45.20. Currently trading at 45.89. We're going to make that 45.20 as our stop, and we're going to leave it good till canceled. Click on confirm and send. Read through the order, make sure that this is what we want to do. And now we've just adjusted our stop. And now, here's the thing. If this continues to go against us, right? If this breaks that diagonal trend line, we get stopped out earlier. So we take a loss. But if we were to leave our stop in place down here and it were to continue to go against us, or if we were to see that gap to the downside, we would take a bigger loss. So reducing our risk in the trade in this particular case maybe makes a bit more sense from that standpoint. All right. So let's do this. There's one other that I wanted to look at really quick. And that is, we got VIX, we got the gold contract. Let's take a look at this one here, which is /MHG. And I happen to see this moving a little bit this morning. And I wanted to kind of put this together. So you notice that this is copper. This is the micro copper contract. And copper has been kind of bailing off of this resistance around the 609 level. That would suggest that maybe we're seeing a little bit more downward pressure, although we're not really seeing huge pressure to the downside as far as the ADX is concerned. But we do have a pretty good series of bear flags, and we're approaching kind of this bear flag move on this right-hand side in the short-term chart. So I'm going to maximize this grid. I'm going to squeeze this down a little bit and show you where that target might be if we get a break to the downside. So looking at going short copper in this particular case. And this is based solely on movement in terms of kind of expectation, short-term expectation here. This has taken, several hours to get down to this point, which is kind of an equivalent distance. So what I did is I just took this impulse move and measured it again from that support level. So looking for my entry, let's put this tag in here. My entry is going to be a break below this level right here, which is going to be a trade below the low of the high day. And that's kind of where we are at this particular point. Then our stop is going to come somewhere above this level here. I'm just going to draw a line. We're going to put our stop off of this resistance. So if this goes back up, we get out quickly. And then our target, so this is going to be our stop, and our target's going to be down here. So let's put in our tags. This is going to be our stop. Whoops. Stop. And this is going to be our target right down here. T target. All right. That's our bear flag process, right? Just like we did with our bull flag. So we're going to look for an entry here. So I'm going to right click at 5.95. Now, real quick before we do that, I'm going to come back over here and just quickly remind. Here's our tick size. So this is our significant digit, 0.0005. This is going to move in increments of 5. Tick value. So if that moves, that's a $1.25 contract price change. Point value is this number right here, 5.9 times this point value, 2,500. So every time that 5 moves to 6, or 6 to 5, or 5 to 4, that's $2,500, which means that our notional value in this contract, 14,912. If we look at this in our futures dropdown, we see that our initial margin to go short is $1,320. So fairly small initial margin. Let's come over here and let's put the trade together. Right click, sell custom with OCO bracket. Now, we're going to create this not as, we're going to do this as a sell stop, essentially, right? So this is, because if we were to leave it right here and sell it with this limit order, that's going to sell right away because we're in that range. We're selling higher. I don't want to sell higher. I do want to sell higher, but I want to sell when it's giving us evidence that it's doing what we want it to do. So I'm going to create a sell stop, which gets us in if this goes to 5.95 or below. It's currently trading at 5.97. So 5.9500 or below. 00 is implied there in this case. I'm going to make this order a stop. We got kicked out of our VIX order again. All right, well, that can happen. And there's a reason why that, we put that trade on. Actually, did we get into that? No, we'll come back to that and look. All right, sell stop to get into the trade. We're going to leave that as a day order. If it doesn't happen today, it doesn't happen. That's fine. Our target to buy this back is if we get down here to 5.85. So we're going to make that target to the downside, 5.85. We want this to go down. We're going to leave that as a good till canceled order. So we're going to buy this back at a limit, which says buy it back at this price or better, which is always when we're buying something lower, 5.85. And we're going to stop this out, which means that we're going to buy this out on a buy stop at 6. We'll go 6.0 is up here. Let's go to 6.0. I like that a little bit better. 6.0. And we're going to do that as a buy stop. And remember, that's going to be a buy stop market, which is going to get worked by the exchange as a limit order, because that's what happens with futures contracts, is that gets worked as an exchange designated limit order. And we're going to click on confirm and send to make sure this is what we want it to do. We want this to go down. Remember, we're going short the micro futures contract here. So we're going to sell that if it goes to 5.95 or below. Currently staying above that at the moment, so we're not getting into the trade just yet. Our initial margin, $1,300. We're going to put this in our futures group. We're going to click on send and fire that order off, making sure that we're aware of those transaction costs. And that trade is not yet filling, which is exactly what we want to kind of wait for. We want that evidence that it is going down. Let's go back to our VIX contract. See? We got in and we got kicked out on that stop. There's that volatility. We were looking for this to move higher. So my guess is, and I don't know, but given the fact that VIX is reacting to this, my guess is that there is some kind of news that is shifting the market to maybe a little bit more complacency because the VIX is bleeding off pretty quickly. I'm going to see by going to /CL if it is in the energy space, and it's not. I don't think so at this particular point. Let's look at /ES, and ES is up just a little bit in the 5-minute, in these 5-minute candles. So maybe there is some news. We were right in the middle of earnings season, so it very well could be earnings. And we could see some initial earnings discussion that is creating a let-off in that volatility pressure and a little bit of upward movement in the /ES. So let's do this really quick. just a quick review, make sure that we've got all of those contracts in here. Let's come back and see what else was I looking at. VIX, copper, crude. Yeah, okay, those are the ones that I was going to look at. Let's go back to our monitor tab, make sure that we've got all of those in place. And our volatility contract we got kicked out on. We haven't yet entered this copper contract. This is our crude. See, and that's going against us back here again. But notice what's happening to the long dated delivery here in crude. It's starting to increase a little bit faster. So we're still up on the contract, although we're losing a little bit as crude oil has gone back up a point from when we were talking about it earlier. So lots of stuff moving today, guys. This is one of those areas, especially when there is news, especially when there's an FOMC meeting, you got to remain nimble. So I wanted to show you one really quick idea before we go. If you go to the Analyze tab and you come over here to Fundamentals and you put in a crude oil contract, what's really kind of cool about this is that when you put in a crude oil contract in the Analyze tab, when you put in any futures contract in the Analyze tab and in the Fundamentals, you're going to see some really cool information. You're going to see the product, you're going to see the multiplier, you're going to see the tick value, the minimum tick increment, what it settles to, and this is a cash settle, not a product settle, not a physical settled. You're going to see whether it is optionable. You're going to see the trading hours and times. You're also going to see the days to go until expiration, what the current active contract is, the expirations, their current prices, and the dates that those trades are taking, those last trades are taking place. So when those rolls start to occur and when those rolls wrap up, and what those margin requirements are for each one of those contracts. So that's some good information to have when you're talking about a futures contract. We take a look at something like VX, and you're going to see those appropriate pieces of information for that particular contract that you might be looking at here. So this is a good, helpful tool. Just wanted to leave you with that before we go here really quick. Again, the reminder, pop over here to the Trader Talks webcast page. Give us a quick subscribe right there. My thanks to Connie Hill for helping out in the chat today. My thanks to our great producers and our great reviewers for helping us to make this webcast possible for you. Thanks to all of you for being here. I'll be back again tomorrow afternoon talking about trading index options. We'll see you then. Take care, everybody. Bye-bye.